Hi guys, welcome to my channel. And I'm Felix, and I'm an online tutor. And if you have any accounting modules that you need tutorials on, do feel free to let me know so that we can tutor each other face to face, group tutorials. And you can just drop me a message, drop me a text in inbox. Then we can be able to arrange and organize on how we can do the tutorials, and we can proceed from there. I'm gonna be offering tax tutorials and taxation tutorials, and from the beginnings of it, like depending on whatever module code that your institution will be giving you, because I tutor students from UNISA, I tutor students from Mancosa, I had a student from Boston, and I had another one from some American institution. I forgot the name. But the moral of the story is, if you have a module that you need me to tutor you on and it's an accounting related module, you can always let me know and we talk about it. So I'm going to be offering classes for taxation as well. Taxation is slightly different from accounting, and yes, both use numbers and they look similar, but some of the rules for taxation are not the same as the rules for accounting. So taxation, was basically happens with taxation in general. Taxation in general, it's like we pay taxes to the government. So those payments that we make to the government, you have to understand how it works. And it's going to be going hand in hand with accounting, because you were with accounting, we're just recording. Remember, we're recording the transaction, but within the transaction that we're recording, there is a portion that has to go to the government. There's a portion that has to remain. Probably when you see a salaried person, people who earn salaries, most of them, they pay tax. By the time I'm shooting the video, the threshold is around 7.4, if I'm not mistaken. Then basically meaning, if you're gonna be earning less than 7.4 per month, you don't have to pay tax. But if you earn more, then they introduce the tax brackets and how much the employer has to withhold for you in pay as you earn. So the more you earn, the more you pay. The less you earn, the less you pay. And there are things like rebates, where the government will be saying, okay, because you've reached a certain age, there's a certain amount of money that you mustn't pay. And because let's say, yeah, it's usually they're age related. They're age related. So if you certain age, certain amount you can deduct from your tax calculation. It is the older you get, the more rebates that you get, because you're working at a time where you most likely are expected to be retiring, but you're still contributing. So the government will be giving you some monies to say, as a form of thanking you for continuing to pay, because every time you work, you pay. It's a law. You have to pay basically. But our job is to now calculate, okay, how much is supposed to be paid for what transaction. So there is a lot that goes into it. There is, for instance, you have to calculate the value tax. You might have come across it in your accounting modules, but here in taxation, you get a bit in depth with it. Remember, the business pays output tax and it can claim input. So you as an accountant, you have to be at a position where you can properly calculate what is going to be the input tax burden, what is going to be the output tax burden, what is going to be the output tax, and what goods fall within the criterion of the ones you can claim for, and what goods fall within the criteria of the ones that you are expected to charge out your VAT output. Then from there onwards, there are certain rules that we follow in accounting. There are certain rules that we don't follow in taxation. For instance, in accounting, if you're going to get a fine, a traffic fine, for instance, a traffic fine is going to be recognized as an expense. Yeah, it's going to be recognized as an expense. But when you come to taxation side, when you're now calculating, let's say, your normal tax liability, we tend to add those things back, because we are not going to give you a lesser calculation for you on a fine, because what happens is, from accounting, you're going to get your gross profit. And in taxation, we're gonna take that profit and we're going to try to calculate your normal tax liability, how much you're going to pay as a tax from that earning or from the amount that you are recognizing as a gross profit. So with the rules of taxation, we just don't calculate, like for instance, a company's taxation is 28%. So you just go on your net profit and you multiply by 28% and you're already there. It doesn't work like that. This side, we have to recognize the expenses that you incurred whilst you're making that profit. So basically, the expenses that you incurred whilst you're making that profit, you are allowed to deduct them in full. What this means is, for instance, if you're going to be operating a store and you're going to have a rental expense, you're going to tell the receiver of revenue that, okay, for the 2024-2025 financial year, I made 2 million. But in this 2 million, I paid 100,000 in rent, meaning you can then deduct that 100,000 and you can then deduct, okay, I paid 500,000 in salaries. You can then deduct the 500,000 until you get to a net where you don't have to deduct anymore. Then you calculate the 28% on it. So it is very much advantageous because it lowers the amount, because usually your gross profit or your gross profit versus your normal tax liability, usually your tax liability is less than your gross profit because of those deductions that you would have made. Any expense that you're going to incur in your process of getting a salary, in your process of getting an income, it is deductible via the general deduction rule. It's some of the things that I talk about when we do tutorials together. So if you require tutorials in this module and you want someone to go through those principles and stuff with you, please do leave a comment, send me a WhatsApp, and yeah, we can talk more about it and we'll see how far we can go with it. It is very interesting. And it's so interesting because in each and everything that you do, you're going to be taxed. And you always are going to be taxed. You've been paying tax throughout, even before you register for taxation. The moment that you bought something from a store and you look at the bottom of the price and then they say 15% inclusive on the price, you paid tax. So it's quite fascinating to see how far it goes. It goes, you pay tax when you are living, even when you die, you're still gonna pay estate duty and stuff. Your estate is still gonna pay 45% or something, some crazy figure of tax. So it's a very exciting thing that I believe a lot of people might consider getting a look at. And if you'd want to look at it, do shout out so that we can start together at the beginning of the semester, preferably, so that we go through each chapter thoroughly explaining until you get the entire concept correctly. And it's something that it goes to be very, very broad, and it's something that is very much unavoidable. So meaning the demand is always going to be there because everywhere you go, there's every transaction. Most, we can say 90% of the transactions that you do on a daily basis, there is some tax implications there. So please do send me a comment, and yeah, so that we can chat more about it. Tutorials are open, and yeah, I will hear from you. Thank you so much for taking the time, and remember to like, subscribe, share.